Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, November 3rd, 2025. It's 9:41 a.m. Eastern Time, so I'm starting the video. So the market's just getting underway here. And here's what we're going to do in this order. I'll try to keep it in this order, may go off on a tangent like I sometimes do. Of course, I was out Friday, had to leave town actually Thursday afternoon. I was out and all day Friday, so catching up on things today. And just kind of wanted to recap last week since I wasn't around to do a weekly market wrap on Friday. And then go over some of the things I'm watching. A lot of these will be some of the recently highlighted trade ideas. I'm going to start out because I've had two price alerts triggered this morning right after the open. This one, O'Reilly. This is O'Reilly Automotive. You can see here it's an objective short entry right now. You have a beautiful, well-defined long-term uptrend line right there. Following that divergent high, earnings are out of the way. There's the E right there, so they've already reported. And they took out, gave you a sell signal here on the break of the trend line. I believe I gave this one to you last week in one of the videos. And now it's taken out this $94 support and the 200-day moving averages. So confluence of support levels taken out with the last of them there. This is going to be your first target right here, about $87, almost on the button. That gives you from where we're at this moment about a 6% drop. It's more of a target zone, runs down to about 85.61, and the next stop is down here. That's about a 15% gain. So this is, let's just label them up and give this to you as an official trade idea because I'm liking it. T1 and T2. Your stop will be commensurate with your price target or targets. Some people take full partial profits at the early targets, just want a quick 5-6% get out. Others hold out for the prize. And others do. Sometimes people take partial profits at a target, let the remaining position ride. Some will game bounces off support levels and get back in and juice the trade from a 16% or 15 or whatever total return to, you can get the bounce, make it 20+%. All right, so there's ORLY, O'Reilly Automotive. The other one that triggered today was Cintas. Needs a little bit more work. I can have a few slight violations there, but it will most likely go coming off the big divergent high. I covered this one last week along with a lot of others in the business services sector to give you supporting evidence that contrary to the vast consensus on Wall Street right now, I think it's a solid case to be made that the economy has clearly turned, is in contraction mode or headed the wrong way, and I'm seeing signs continue to accelerate. So AI is one thing, keeping the indexes near highs, but we're going to talk on that real quick. Let's start there. Let's go to the indexes. Surprisingly, the big market moving Mag 8 stocks was a non-event for the market, but the takeaway I get is we're still below where we reported. Remember, Tuesday kicked off peak earnings, again, for the companies that matter, the big tech stocks. So you had them all reporting Tuesday night through Thursday night. And here's where we are. This is the broad market, the S&P 500 right there. There's Tuesday's candle was this little skinny doji right here. You take it across and you can see you take what you want out of it. Glass half full guy or gal will say that it's bullish because the market didn't go down. Now, remember, these companies blew away, beat earnings as they always do. I always say, the Mag 8 stocks reporting earnings, these, $1 trillion plus club companies, if there's one thing that they've honed in on, it is managing earnings and massaging the books to make sure that they consistently beat expectations. It's almost a guarantee. It's kind of like expecting or not expecting Tim Cook to come on stage and say this new iPhone's our latest, greatest, fastest, best iPhone ever. So we knew that, you're going to get beats on those. They always do. Big quarters across the board. But what happened is the market wasn't buying it. It wasn't really selling it either. Again, there's where we were closed Tuesday. So there's Wednesday's close, a little higher. Thursday sold down. Friday kind of a non-event. So that to me is more telling. Again, you guys, some will see it glass half full, saying, "Wow, look, good solid earnings. This market's got a lot more upside." I see it as That's it. There's just no buyers left. We're seeing, again, that's what, big part of my trading is all about, looking at these momentum indicators. Like this is a weekly chart on the RSI, PPO. These momentum indicators show you that, yes, while we're in an uptrend, the momentum has certainly been waning. And I don't want to hyper focus on that. We'll have some more big earnings this week. But again, I just want to point out that for the week in post earnings, it was, if anything, a slight profit taking collectively over all of them. Again, we'll go into each of those individually. QQQ, about where we were. Here's Tuesday right here. We closed Tuesday where my crosshairs are, and we're effectively right there right now, a hair above it. IWM, the smallies, we have a short trade on that along with QQQ or SPY if that's your thing. And we're still looking good. Our breakdown, back test, couple back tests. Stops remain on a weekly close above 250, 250. So no violation there yet. And just need to get some traction. So this one, of all of them, is related somewhat to our TLT trade. We shorted TLT. We shorted treasuries right here on the break of this bearish rising wedge. We had a nice little kickback rally to re-enter. Then we took out that 91.21 support, hit my first target, and now we are at the bottom of my second target zone. Let me move this out of the way. You can see that little red candle. So I got it to you in pre-market that we're at the top of the zone. Now we're at the bottom of the zone. There's also a gap just below it, so they may take it a little bit lower. You also want to look at ZB Treasury futures, and I'll still maintain T3 for now. However, this is net bearish for small cap stocks because this means yields going up. Again, despite all the recent Fed cuts, I've talked on that quite a bit. Fed keeps, as they were doing a year ago, cutting short-term rates with long-term rates not responding as they have historically. Again, confirming what we've known and what I highlighted for over a year now, the Fed has lost control of the long end of the curve. They used to have some control by just lowering short-term rates, but again, they do not set the rate on the 10 or 30-year bond. They don't even set the rate on the 1-year bond. They can certainly try to coordinate with the Treasury to, manipulate supply and demand to whatever extent they can, but the bond market's a huge, massive entity with a lot of players, and unfortunately, the government can only do so much to control long-term rates. So that's it. And again, the takeaway, guys, whether you're in this trade or not, is that is, again, I use the word net bearish for small cap stocks, particularly because they're more dependent on borrowing than large cap stocks. Net bearish doesn't mean that if long-term rates go up, bond prices fall, rates are going up, that small caps must fall. It's just a headwind for them, those rising rates. So that's why we call it net bearish. And so far it is, translating to actual bearishness as well. You can see it. This looks just like this is, Smalley starting to realize, hey, Treasury long-term yields are backing up recently. All right, so let's go to talk about the VIX. VIX is still setting up. Had that breakout coming off the primary uptrend line. We had that first spike up to the 2862 target, pull back, and so far the VIX is still, it's been rising for the last week, and now we have those big techs out of the way. And like I said, they weren't able to take the market to new highs. They were within spitting distance. Once again, not the end of the world because we're not 5-10% below there. But the fact I did want to continue to reiterate that they failed, those big blowout quarters and record earnings and all that, failed to continue the rally in the broad market. So, again, this week, I said it last week, the dust will settle. It takes a few days for the dust to settle. So this is a week we'll know. And nothing has changed. And again, that's why I do these videos, to reiterate, because the technical posture hasn't changed, nor has my outlook or positioning. So we still short the indexes, long the VIX, short treasuries at the moment. I gave you an update. Let's roll into the metals. Let's do that real quick. Silver, I gave you the futures today, but this is silver ETF, same thing. Last week, I highlighted that we hit that 41.66 support and comparable horizontal price support, one of my targets on silver futures. That was after we shorted with near impunity right off the highs, a break of the bearish rising wedge, all-time highs. Swing it down, set up a 60-minute bullish falling wedge. But as I said, these are sometimes, and it worked. It was, it's a nice, nice little pop, 6.5%. But I think that may be it. And if it's not, what I do believe is the risk reward is no longer worth it to try to milk out that last fraction of percent. I'm talking about, that 60-minute chart of the future. Same thing. You hit the price support, bullish falling wedge breakout, hit that first target last week right away, quick. Been there, so you're still there. Nice time to either take profits or tighten up your stops if you think we're going higher. Some of you think that silver and gold are going to go a lot higher. As I said last week when we highlighted that as an objective area to reverse to game a bounce. I also said long-term traders can get back in if you think gold and silver are doing that, and just have your stops appropriate. However, I do think there's a decent chance. I don't have a strong conviction right now. Like I said, it just... here, I'll show you why. This is, I was out on Friday, but my snare for the dollar continues to play out. The UUP is a dollar ETF, dollar index ETF, that is. This is that massive multi-month trading range on UUP right here. Long at the bottom, expecting a bounce, hit our first target, and hit the second one, hit T1 again. And as I've been stating, I expected was favoring, leaning towards a breakout, and that this, when we got it, it would be an incremental, not an all or none thing, but incremental. And you can see it's put pressure on silver. Silver had very constructive. Again, we went long last week for the bounce because it was a very extremely oversold, biggest drop in years. Bullish falling wedge, positive divergence, everything to like on the 60-minute chart. But with the dollar breaking out, it's been a net headwind. Again, so silver hasn't gone down since we hit my first bounce target last week. It just hasn't gone up either, right? So, and this is a headwind. And if this breakout sticks, and right now I have no reason not to expect it to, we may come in back test. Maybe we come in back test. If it fails and we start moving well back down within this, back below T1 by a good amount, there's the next support. We start going lower. Yeah, that's going to be net bullish for gold and silver. However, if my expected scenario plays out, whatever, regardless of what happens in the very near term, if we zigzag our way or just keep going up here to T2, again, more and more likely that gold and silver traders are going to get the memo that the dollar is rising. And again, I'm just going off what I gather, reading, hearing, listening. The vast majority of so-called experts or pundits have been bearish on the dollar, thinking dollar down, and that helped to support that case for gold continuing to rise. So we'll see. Again, right now, I'm going to see where the dust settles on this today, see if this breakout sticks. I wouldn't be surprised to see a little profit taken in the dollar in the near term, but again, my very near-term convictions are low. I just want to say that, it's the RR is probably limited now. Right now, the risk-reward ratio isn't so hot on gold or silver right now to milk out that last little bit. But if you're long, there's nothing wrong. Just set a stop and let it ride. A tight stop. That way you don't get back much. All right, so the other one is the Euro-US dollar pair. Euro, of course, being the biggest component of the dollar index at about 57.6% weighting. And that one also, as I was going last week, broke down below that key one. It's about 115.5 support level there. So, and that's coming off the big divergent high, then the sell signal there. So this has been the rally in the dollar, which is the euro falling against the dollar. And remember, gold has a positive correlation in this chart. So when this is going up, gold and silver, again, it's a net bullish impact on them. This is the rising euro falling dollar, and this is the rising dollar falling euro. So that's it, and that opens the door unless this breakdown sticks. Remember, this coincides with that breakout I just showed you in the dollar, and this is my next target, which will coincide with that next upside target on UUP I have. If that happens, again, that's likely No guarantee, but likely to be a net headwind for gold and silver. And let's wrap this up. Keep it quick so I can get this one out to you by looking at the Mag 8 stocks. So here's NVIDIA, how it looks. Really no change since I left town last week. It was Wednesday, Thursday. We're right about where we started before all the big tech stocks started reporting earnings last week. NVIDIA's there. Still has very much divergences, which again are not sell signals. You'd have to drill down to get anything close to a sell signal. I'd give you probably this trend line right here on the 60-minute chart, which were little brief punch down below there. What was that? Friday's close. We're above there now. So any new high soon will be a divergent high. And so maybe just watch for a break of this trend line on NVIDIA. They're not going to report for another couple weeks. Apple gave me a sell signal today, so I'm sharing this as a trade idea. I was going to get the post out to you today. I figured just start the video, give it to you there. It's a sister trade really to being short the NASDAQ 100. It's one in the, they're going to move together for the most part. But Apple on Friday while I was out put in a divergent high and a bearish engulfing candlestick. You can see right there following earnings. So, it rallied. They sold into the post-earnings rally and engulfed that previous candle right there. So there's a bearish engulfing candle. It also had a nice little uptrend line right here, short-term uptrend line, and that also broke on Friday as well, just below it. But today we're solidly below it. And so the strategy, if you like it. The RRs are phenomenal. The downside risk, you put a stop just above the top of a bearish, and the bearish engulfing candle gives you about 3.5%. We'll call it a 4% loss potential. And these are just near-term targets. Now, based on the weekly charts, if Apple does this, here's my thought process. So, I would most likely, almost certainly add additional targets, because if so, then it shows you that this bearish stuck and we get some follow through selling, and that way we're going to go down. It's going to be a drop from the highs about 11-12%. It would almost certainly, not guaranteed, but most likely mean that the NASDAQ 100 is going to come down as well if that target's hit on Apple. So by my logic, if we get down there, it's going to do some damage to the charts of QQQ as well. Remember, we're still on sell signals from QQQ. We had dual sell signals a couple weeks ago. One of those was negated, the bearish engulfing candle, but what wasn't was the primary uptrend line break. I know this is a busy chart, but there it is. There's the trend line break that happened, and we back tested and we're still below it. So by that metric, we're still on a sell signal. And, as I said, if you turn off all the lines, should Apple drop 10-12%, that's probably going to bring QQQ back down here. Maybe take out the 50-day. You can see they come in. They like to buy this yellow line here. It's the 50-day exponential moving average, helps define the short-term trend. And that would probably take us down to and possibly below the 50. Again, it's a big if, and it's a take it or leave it thing. And it's also, like I said, if you're already short the NASDAQ 100 along the VIX, then it's overlap. The other one's Microsoft. It's kind of a busy board. Just let me leave this here to show you what I see. We had a big divergent high there. Equal high so far, double top high. Again, this one's also post-earnings profit taking. So it kind of shows that, yeah, big deal. They blew earnings away, but the buyers aren't coming in. It just shows that, remember, that any stock, any security is going to bottom when supply and demand have equalized. So in other words, a stock will bottom when there's finally more buyers than there are sellers. When the sellers have washed out and finished selling. Same thing in a bull market. Stocks are going to go up till there's no more buyers left. And almost all bull markets, everyone I've ever seen, ends on bang out, blowout quarter. 80% of the stocks are hurt of beating expectations right now. That's how tops end. And then it just goes to show the stock market's a forward-looking mechanism. The earnings that were reported today, stock market usually looks out 6 to 9 months ahead. Insiders in Microsoft, they certainly knew. Big hedge funds that have ears all over the place, that they know. Bottom line is we'll go off technicals here, and all I can tell you is the stock has so far peaked. It had a divergent high here, as I talked about back then. It had one here, equal high, still lower lows on the indicators, and it reported earnings. And so now, I know it's a busy board. I'm going to draw the key level, and I have a price alert set here, this uptrend line right here. You can see it captures all these lows back here, bunch of lows there, comes in, captures all the recent reaction lows. You've got the 50-day exponential moving average, which Microsoft has been dancing on, that yellow line, and really even price support to an extent. But I like the uptrend line right there. Let me make it big and fat, color it up so you can see it. There it is. All right, so that's that. First stop, 493.50. Then you have the 200 to contend with. But again, when you look at the bigger, longer term charts, you know, this is where ultimately I have Microsoft going these purple lines right here, all the way down here, which would be if hit, it's going to be a drop of about 65%. All right, next up, Alphabet. Alphabet reported, market liked what it was selling, put in a divergent high. You can see the clear negative divergences from this point to this point right here. Let's draw it up with the line tool there. And remember, divergences are not a sell signal, nor is this divergence confirmed. What would confirm it is a bearish crossover on the PPO, that blue line cross on the white line, and to put in a peak that is equal to or below this peak. And so if we continue lower, and what's going to continue us lower, I'll break this uptrend line. I have an alert set right there, I believe, as well. This little minor uptrend line right here comes off this candle, the low of that October 21st candle. Nice, clean, you know, short-term uptrend line, and a big old gap right there. So, you know, they should, and this is in little air quotes, you know, buyers, quote unquote, should step in and buy a backfill of this gap. If they don't, you're likely to continue down to the next support level. So that would be 257.15 plus this primary long-term uptrend line. If so, that's going to be a drop from where we're at now of about 9% in Alphabet. That's Class A. I like, you know, look at GOOGL. You can trade either one. There's a more significant uptrend line on the weekly chart right there. If and when that goes, that's a more powerful sell signal. All right, and this is the weekly of Amazon. I was already on the weekly chart. I'll just take it over there. So we continue to diverge up. This most recent high, you had this uptrend line off the early 2020-25 lows, which we broke down below, and we are currently back testing with the divergences in place on this long-term weekly chart. Daily chart, that's what it looks like there. Divergent high 1, 2, and 3 as the indicators continue to diverge on this new high on Amazon. That was OpenAI induced today. Another OpenAI circle jerk deal, money coming from OpenAI to Amazon. And Meta not doing so hot since it put in this same thing as what Microsoft, what I just showed you with the double top, and you have it on Meta too. Double top high, divergent high, divergence building. Then you triggered the sell signal on the break of the uptrend line. It bounced, but moving down, and this one has taken out its 200-day moving averages. Took them out last week. And try as they may, they keep rallying back. They can't get back above the 200. So this stock is on a sell signal, powerful sell signal unless it can regain these 200s. And to see where it's going, you just look at the weekly chart. I don't see anything stopping the stock until it gets down here at least 550.43. And if that's the case, that's going to be another 16% downside on Meta. My next target is down here, be about a 32% drop, and then somewhere down here if and when that level goes. I believe I caught up on all the questions. I only saw one that I hadn't answered since I left town. That was a chart request on PLTR. Palantir, and I gave you my thoughts there. The stock is solidly in an uptrend. No sell signals at this time, other than we did have a breakdown right here of this yellow. This is a yellow minor uptrend line. We broke down. We're currently back testing. However, the primary uptrend line will trigger a sell signal right here, and that's the trend line that comes off the August 2024 lows. You can see it nice and clean. You have that reaction off that August low, major reaction, major low there on the April lows, also a tag of the 200-day exponential moving average, and we just hit it again. So based on the technical posture, again, doesn't matter how it trades tonight after they report. Over the in the coming days or weeks, this is the most likely scenario. But again, stock support is support until less broken. That's all I can tell you. So that's the key up trend line right there, that white trend line. And what I didn't give on the home page on that reply was my weekly. This is my weekly of PLTR. Big divergences, which is typical. They'll usually span at least a year, sometimes 2 or 3 years on the weekly chart. The big tops before the divergences manifest in the form of a trend reversal or a bear market or correction. There's that same uptrend line right there. Comes off the mid 2024 lows. I believe that was one I had there. You can see this stock, like many tech stocks, loves its 200s. You're in a bull market when you're above them. Once you take them out, as you did right here, you enter a bear market. You stay short. You short rallies back to the 200s, and then you cover and go long once the 200s are taken back. Once they're taken back, pullbacks to the 200s the buyers will come in. So obviously, if we break this level, that's going to be your next support. First target, the 200s, and I have price support just below them at about 120, almost 128. So my guess will be after this thing breaks down here, we'll probably overshoot the 200s on the way down, hit that 128-ish support, and then they'll probably buy it, park them on there, maybe rally for. We'll see. We can only cross that bridge when we get there. It's percentage-wise, that's a big drop, guys. That's a drop of about 38% down to my 128 target right there. So that's PLTR. Let's see how they do today. I can tell you a little bit of minor support there. Again, I give you levels on the daily chart, but these are kind of the weekly targets. And ultimately, before all is said and done, I think it'll come back and test its bull market uptrend line. That's right here. Comes off the lows of 2023. And that means from where we're at today, again, no sell signal yet, but probably come in around that 88.66 target there. So that'd be about a 55% drop on PLTR from where we're at right now, if this trend line and this intersecting price support are hit. Okay, let's keep this one short. We're at the 27.5-minute mark, or almost 28-minute mark, I'm sorry. We'll wrap it up here. I'll get it out to you, and I'll continue to hunt for new trade ideas. If I missed any questions, just drop them in the comment section below this post, and I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.